So hey, what's up guys, hope you guys are doing good. So today I'm gonna look back into my trades, gonna analyze the whole journal as as I do every week to find out what are the problems that I've been doing the most, what I need to change, what I've done good. Okay, so analyzing my journal to find out my problems, right? So I can correct them and improve myself. Okay, so these are the this was the 2K trial. So I have actually mentioned that I actually don't trade any live account or any prop firms, but I am learning in the demo account, and I have organized my demo account this way. This would just simulate the same as funded account. So the account size is 2K. So uh, I want to pass this account. If I want to pass this account, I have to make around 8%, which will be a $160. Okay, and the max to max loss I can do for a day is $60, and the max loss is $150, I guess, maybe something like that. Okay, so starting off with the number one trade here, if I open up this one, the first trade that I've took was in October 9 2024. uh, I had a loss. Okay, now what actually happened, I gotta say this: 1 2 3 4 5 6 7 8, what is this, uh, 9 10. All of these losses that you see, all the losses, during these losses what I was doing okay, was a very my type of problem. What I'm gonna say about this, like, I always have a problem of over learning. Like, if I'm studying something, if I'm learning something, I always think like, in order to become good at it, you need to learn more. But what I have found out by myself, and is trading is a very unique type of thing. Okay, it's not the same as the other traditionals way, the way you become doctor, the way you become engineer. It's not that kind of way to do trading. Trading is on a whole different level. Okay, you have to completely change your mindset, and you have to completely change the way you think of how the things need to be done. In trading, I find out myself that less is more. Okay, there is thousands of way you can literally make money from. There is thousands of concepts, thousands of way that how you gonna look towards the market. Someone's gonna say ICT said look towards the market this way. Somebody says that no, the market doesn't look this way, market moves in this way. Somebody say this and that. Everybody is right. Everybody is right. Nobody is wrong, because market is a vast place where you can literally put anything and make it work. All you just have to do, what you have put into the market, be consistent with it, and consistently striking, just like a bladesmith does. How does a blade get ready? They take a, what is that, just take a what, a piece of metal, they forged it into the fire, then come consistently hammering it, right, to give it a shape. That's just the same. You first pick up something, not a lot of things. I'm saying it by my experience these few months, and from what I've learned from my mistakes. Okay, so you have to pick up something. Okay, not everything out there, just something. You pick it up and keep hammering it, keep consistently refining it, keep doing the same thing again and again and again. Just like, if I say you just going to the gym and coming doing the trading is kind of the same. All you just gotta do, just go to the gym every single day, do the same thing again and again and again. But what you can do, bicep curl is a bicep curl, but what you can do, you can do a seated curl, you can do a standing curl, but it's a curl after all. what you did, you refined yourself. So same in trading as well, that you pick up something and just refine it and make it simple, as much simple as possible. My problem was I was learning a lots of things. First, I learned ICT, and you guys know that ICT has a lots of things, and I would personally say that you don't need to learn. You don't have to learn everything. Max. These days, what I have seen, that maximum of the things that he is saying, I won't say it's a bullshit, but that's too much. You doesn't need that much things to look at the market. You just need a very few things to look at the market. So what I was doing that, I'm gonna learn every single video. My personal thought process was the very first time was, I'm gonna learn every single uh, thing that he has gave me. I learned this. Oh man, I'll become a damn. I'll become some sort of trader. I don't know, maybe a god. What the hell? Find out. More I was learning, more things that was coming into my head. For me, it was more getting more and more difficult to execute a trade. Okay, and I was back in the times I was always using like the free times. What I was doing that, putting these indicators to the chart, how it works, putting that indicator how is in the chart, how it's doing. Oh man, this worked out here, this worked out here. Next day, I'm doing trading, I'm seeing that indicator. So there was no solid approach. Yeah, I'm gonna say that there was no solid approach. I did had a little bit of my strategy, but I still didn't had done like what I was doing. That I was thinking my problem is to that I don't know much. It's not like how much you know. It's about how much you have executed and how much experience that you have gathered from those executions. It's not about how much you learn every single day. It's about how much you learn from your personal executions on whatever strategy you have. Okay, whatever strategy you have. So recently, what I've done that, enough of this bullshit of learning more and more and more, completely stopped it. I'm only gonna learn if I see through my journal, is anything there that is related to learning that I'm losing because of this thing that I might not know. That's when I'm gonna learn. But until it's not that kind of thing, I'm not gonna learn anything else. I was also learning some Wyckoff theory, man. That was another thing pushing me to somewhere else. So I completely stopped everything and focused on simplifying my approach. I already had a approach, but all I had to do is more simplify it, and I did it. Okay, uh, I'm gonna say I've been recently watching the Justin videos. If you guys know him, Justin Oilner or something. I am sorry for if I have like uh, pronounced the wrong title of, but his name is Justin, and I find out that the way he trades is quite similar to mine. And what I have found out from his trade breakdowns, that first of all, putting all the ICT concept in a single thing was my mistake. Then I have watched some of his videos, and then I finally I can say that I have simplified my approach, and I know this way that how am I supposed to do, how am I gonna approach to the markets. Okay, so a few changes that I've done is, first of all, I started writing my thought process. Okay, I don't know if you guys do it or not, but it's helped me out a bit nicely. Okay, so I've started writing down my thought process, and uh, as I've mentioned that I have simplified my approach. So my simpler approach is, if I give you guys a little bit of what my approach is. It's all you guys know that I have what is that? Trading psychology, study material. Where is my trading? So these are this is total 13 trades, total 13 trade. Okay, it's a 2k account, is total 13 trade, and I'm still in drawdown. If I show you guys in the table view, so as you can see here, mm, all of these trades, okay, all of this trade was mine. Like first trade minus 31, I let then minus 15, minus 2. But one thing that I have done, that I have managed my days, that's why it is still I took 13 trades, but my my drawdown wasn't below $50. My drawdown wasn't below around 50 to $60. Okay, because I control I or whenever I start like, even if it's a demo account, I don't fucking care. First thing first that I made is an perfect approach for that account, a perfect risk management approach. The how much percentage that I'm gonna risk, if what I'm gonna do if I kind of what I'm gonna do if I lost, and what I'm gonna do if I win. Okay, so like how much everything is a total risk management system that the very first thing that I always do. Okay, so I was risking $20, $30, $20, $30, $15. Then I went to $5. Like, if I want to consistently trade this account and learn from it, now I have to risk lower percent. So I started taking $5 per trade risk, and doing. I had one swing trades that was also not pretty good. Okay, so but it did win. I made a 1 to 3. But recently, that I've seen that things have changed. These two trades, yesterday, today, is not like the every day is coming. Every day is my trading opportunity, but uh, what find out that the way I'm looking at the market is actually working. It's actually working. Okay, let me give you live today's example. uh, USD JPY here. Oh, it's my second account, huh? Wait. It's my second account here. This is my that was my second account, so it takes a lots of time to open. I don't know why. So I have today I was watching Euro USD and USD JPY. I didn't had any trades in the both, but the way I have approached was right. The way I had my thought process for buying and selling was right. Okay, each trade gonna have two outcomes. Either you're gonna buy, either you're gonna sell, depending on market structure. So what I am doing and what I've simplified, first of all, fuck all the indicators. No fucking indicators. Second is fuck your that concept, those concepts, things that I've learned. I'm gonna be with them, refine them, and use them consistently. Very few things what I'm using, I have learned in the PDA days. The most thing that I always use is fair value gap and order block, rejection block. That those no. You get rejection block, breaker block, the no, three things: buy stop, sell stops, buy side liquidity, sell side liquidity, fair value gaps, and order blocks. These three things that I always use as my targets, also as my point of interest. Okay. Second, everybody know about market structures: higher high, higher lows, lower high, lower lows, consolidations, things like that. Okay, so my very first thing that I come and do into the market is understand the structure of the market, what price is doing, what price has done in the past. You don't have to see every day, just a little bit. Like if I want to trade this, just watching a little few structures is more than enough, because I'm only trading London session, probably 3 4 1 hour candles. So I have to think it that way. Okay, and I've mentioned that every trade gonna have two outcomes: either you're gonna buy, either you're gonna sell, depending on how the market structure is and how the market, how the price is respecting your point of interest. Is it validating, or is it invalidating your point of interest? Okay, so as I came here today, I had here a 1 hour fair value gap. First of all, that I'm gonna show you something how I read my market structure. So yesterday I broke to it's Sunday opening, I guess. No, it's actually Monday. Actually, what we have done is we have broke through our 4 hour order block here. Okay, and then we went higher, and you see this candle, the way we have like went higher and kind of weak off there. We swept, we kind of done the, we didn't swept anything, but we swept this equal highs here, but we made a equal, relative equal high here, which is a liquidity. So my first thing was, okay, if I look at the daily, price didn't retrace much, and we have some nice big fair value gap. So price can retrace a bit. Okay, price can retrace a bit. And then I went to 15 minute. If you go to the 15 minute, what do you see? You see price went higher, swept this liquidity here. There's two equals highs, price swept those, then price swept internal liquidities here, internal swing high here, also this internal liquidity. Then price shifted structure, came back all the way towards this fair value gap, didn't tapped in, but kinda came to the OTE level, I guess. All right, came to the OTE level, as you can see exactly, and then pushed lower. Okay, went into this 1 hour fair value gap and was consolidating here. So my first understanding was, once price has went into this fair value gap, now if I want to become a buyer, okay, if I want to become a buyer, I want to see that the uh, bullish PDRs, bullish fair value gaps and order blocks are getting respected, and bearish fair value gaps and order blocks are getting disrespected. So if I take out this range here, so you see price didn't respected this fair value gap, broke through it. It did a little bit, but then it pushed higher, broke through it, and make this fair value gap and was respecting it. So this is what I've learned. Now as you can see, we had some bearish type of SMTs here. So my first thing was, if I want to buy into this market, what price need to do for me, what kind of structure that price have to give me, so I can become a buyer, I can be confident in becoming a buyer. What was that? Like if I want to buy, this is what I've learned as well. These are my thought process that I've wrote as well. So if price really want, if I want to buy in the market, my first priority was that I want to see these highs here get broken with displacement. That means this IFBG here is holding the price, and price is pushing higher. In the London session, I wanted to see that price broke through this level here, that's kind of show, and then give me a retracement, and then I can be a buyer, then I can become a buyer. That's when I will become a buyer. If I lost there, completely fine, then I'm gonna see if I have done any sorts of problem or not. But that was my buying scenario if I wanted to buy. Not pretty much, not pretty these and that and those, simple. Okay, second, simple understanding that price is validating, price is respecting the fair value gap. That means buyers are in the control, no problems. But if price disrespect this fair value gap here and broke through that with displacement, that's when I can become a seller in the market. It's pretty easy, right? We could have we have this bearish SMTs. we, we could have, like, came a little bit more in. This structure here is also kind of supports, kind of supporting the, what did they say, this price action. And if I take my standard deviation and and kind of, mark out this standard deviation, right? Then if we go to the 5 minute, actually, so I can understand it better. So if you guys see this, okay, okay, so the standard deviation is already here. Okay, so if you guys see there, before we go swap those equal highs and finally shift to structure, this was our manipulation move here. Okay, this was our manipulation move here. So according to standard deviation, where the hell we can go? This 2 to minus -2 to 2.5, this 4, these are some nice targets. So we had this fair value gap. So you see, we had this fair value gap, we bounced from there, and the final could be this 4 hour order block that we could have reached into. That was a 1 hour order block, sorry, where the -4 standard deviation also made. So we could have understand, okay, price can push lower, so both buying and selling are getting respected. So we could also bounce back, kinda, come back and retrace and again go higher if we break through. If we had break through this, I I am a buyer into the market. I'm no more seeing selling. So as soon as price broke through this, I'm a seller. You see, price broke. 5 minute price broke through. I switched to 15 minutes. See if price has wicked off or actually body close. Sexy body close, you can see here. But price went higher. I'm still not kinda okay with that. You know, so I'm I'm waiting for more structure to come into the play. Price came in again, pushing higher. What I'm seeing here, I'm seeing that price is not respecting this fair value gap. Price is not respecting. Instead, the price broke through, and then I see that in the 15 minute, what price has done, price swept these liquidities here and kind of pushed lower. So now I can see, okay, this is the fair value gap that I can definitely look to sell from, right? But I want to see that price at least comes to the discount level or near the discount level, so I can play a trade at usually my OTE level here. Price didn't came in, actually sell off from the discount, actually sold off from the discount, and then price started kind of a choppy. You see, pushed lower, go higher, pushed lower, go higher, break through this lows, again pushing higher, now coming in low. So it's a proper consolidation. So that's how I wasn't able to find any trades. So if you guys have seen that, it's that's all. Okay, that's all into my approach. I see the market structure, I see what is the drawn on liquidity. If I want to become a seller, what could be the drawn on liquidity? If I want to become a buyer, what could be the drawn on liquidity? Understanding the higher time frame, this was the main problem was with me for a long time, that I was completely ignoring the higher time frame. Okay, like, where the higher time frame wanna go? What I used to do, in my simplified approach before, what I used to do, I was coming into the market, marking out some point of interest. No idea where the hell higher time frame price wanna go. Marking out some higher time frame point of interest up, marking out some higher time frame below, and I was watching, like, if the session after, like, you see the session opening price. Let me show you guys. This is the session opening price. So what I was thinking, this is the session opening price exactly. If we have some point of interest below, we have some point of interest above. If price comes lower, I'm buying. If price going higher into my point of interest, doing the market structure shift, I'm selling. But that's where I was wrong. What the structure, brother? What the hell the high time frame structure is? No, I have no idea what the high time frame is wanna do. All I'm care about session opening price and point of interest. But that the point of interest only get valid when you have the high time frame context behind it. I'm marking a fair value gap, but I have to know where the hell the fair value gap is, how the fair value gap was made, what the higher time frame is telling to me. If this fair value gap is a target, or is this, like, if you understand the higher time frame, you can understand that if this fair value gap gonna hold or not. right? So this was a very important thing that I was missing. It's been around like 5 6 months I'm trading, but this is the most important thing that I was always ignoring: reading the structure. So that's what I'm focused on right now. Read the structure, understand the drawn on liquidity, understand the market structure, then have your conditions when you how we like then understand the validation and the invalidation of the PDRAs. Depending on that, write down your thought process, when you're going to be, in which conditions you are going to be a seller, in which conditions you are going to be a buyer. And this is what I've been following. So yesterday trade, this 6th December trade, I made a 3 hour trade here. Okay, 23 $23. I reached $5, 5 5 6 $7 maybe, something like that. Okay, and I made this. Okay, this trade, if I rate this trade which trade was that I was, wait a sec. Okay, this trade, I'm not gonna rate this trade a 5 hour. Okay, I'm gonna rate this a 3 hour trade, because the main problem was like we did had a 15-minute close above the main threshold, but we didn't completely broke through the fair value gap. So that's what I was wrong. Like price could have still come back from here after sweeping some liquidity. So my luck kind of played out. Okay, but right I still followed my approach, but understanding market structure, waiting for validation and invalidation for point of interest, and writing down my thought process, and understanding the seller. Like I was saying back then, like if price broke through this pair order block, I am going to be a buyer. I became a buyer. Instead of breaking, I looked for the main threshold to be broken. Okay, and I became a buyer then, and trade nicely played out. And then yesterday here, this trade I've already made a video about what I've done. Okay, the main problem was this trade was that in the higher time frame, I did everything, every approach. Okay, I completely seen every approach of mine, that my simplified approach that I've told you. Okay, but the problem was with this trade was the high time frame was overall bullish. Price after coming below, price has went even higher. But what I was ignoring, not ignoring, like I wasn't able to understand like how the lower time frame, like the thing that I've just told you, sweeping internal, doing the structural shift and continue toward retracement. And the higher time frame I was bullish, but according to the lower time frame I was bearish to give me some retracement, right? Like I am not a higher time frame trader. Okay, I am only trading the London session, so you have to understand the overall in the higher time frame you could be bearish, sorry, bullish or maybe bearish, but for that specific period of time you can be the opposite. Like if the higher time frame is bullish, you can be bearish, but sometimes the higher time frame can be bearish and you also can be bearish, depending on what I've just said, how the structure is showing you the validation and invalidation of the PDRS, and then how price is respecting your point of interest, right? So that I was like kinda bullish here, still make a 1 to 1. I got stopped out at, I went like I made a 1 to 2, then I go went to break even, and price took me out, and I got out like all I was, I get 1 to 1. Okay, so in the whole journal, all of this time I was doing those bullshit. Number one trade, two trade, three trade, four trade, five trade was my, what was that? Five trade was my swing trade back in the day, back then. All of these losses, all of these losses, I had a win here. Oh, that's another bullshit thing. Okay, So all of these losses were the result of my overlearning and try to understand more and more instead of simplifying and focused in a simple thing. I didn't used to read any higher time frame. All these losses you see 1 2 3, I didn't used to do any sort of higher time frame structure reading, nothing. I was doing, let's see the okay, the price is doing this, let's see what's this indicator saying. Oh, I learned from that from ICT. Oh, kind of this kind of showing me the session opening price doing this, take the trade, loss. So finally I have cut out all these bullshit noises and completely focusing on this simple approach. Okay, this simple approach, now I'm committed to myself that no matter what the fuck happens, just be with, trust the process, be with this approach, and keep refining it, keep doing it. Okay, just keep doing it, and keep doing it. So this is for the day today. Okay, this is today is actually Tuesday. I'm making my weekend journal. That's completely okay, no problem. So this is what I have found out. The problems was overlearning and things like that. Like if you see into my trades, uh, as I have analyzed these trades, I found out it was not a learning process. It was, I didn't lose a trade because of I didn't knew that. Okay, I didn't knew that. That's why I've lost a trade. The problem was psychological, I would say, and overcomplicating things. These were the two main reasons that I have lost all of this trade. Okay, I was not trying to simplify my strategy. I was trying to even overcomplicating my strategy. Like if you actually go and tell it to someone, like okay, that I've just told you, like if price break through this, show me that is invalidating the fair value gap, I can be a seller. If you just like go and tell it to someone, like they would say this much simple thing. And no man, the trading could not be this simple. Yes, trading could be even simpler, even simpler. Okay, so I am trying my best to actually refine more. Okay, stop doing all those nonsense of learning more, adding bunch of fucking indicators, all things out, completely focusing on this. Okay, completely focusing on this and this simple approach, and that's all. That's maximum. Like what else I don't find out. Like this is everything: microstructure, point of interest, understanding the validation invalidation, understanding the buying and selling condition, and press the button. Okay, still I was having a little bit of problem in this trade in the 12. This 12th trade, I was not sure about my this trade actually. Is this not that this trade? Maybe this trade. Yes, this trade. I could still make a 1 to 3 here. The problem was I wasn't uh, able to understand where I have to put my stop loss. This is another thing that has been going on with me. I wouldn't say it's also not a learning problem. It's a problem of experience. Okay, like the more you get experience with, you will have these ideas. Okay, I know this price not gonna break through this low. I know price not gonna break through this high. So this is what it should be my stop loss is. These things will come with time, no problem. I have learned mm, from this mistake. Okay, that okay, the instead of here my stop loss could be here. Like if price gonna break through the short term low, price also gonna break through this intermediate term high. So things like that. Okay, now these things will time will come. Anything I'd say, nothing else sort of problem is there. The, so these were the main problem was for these whole 13 trade was over complicating things and over learning. So I don't know if anybody's watching this, but as a beginner, the only thing that I can suggest, that I have learned from my own, not anybody came and told me. I'm not under anyone mentorship. Everything that I'm learning is on my own. I'm doing mistakes and I'm spending time to understand why I've done the mistakes. I was doing the mistakes, and finally realized that overlearning and overcomplicating things was the main enemy of mine. These were the things that was making me these losses. So I cut it down. So if anybody's watching it, so I'm gonna say, in trading less is more. So try not to just overcomplicate things. Okay, find a simple approach. Everybody, if YouTube, everybody gonna say these things to you, like, don't overcomplicate things, things like that. Don't overcomplicate things. Then don't overlearn. But when you actually learn these things from your own experience, that hits completely different. Isn't it's not like that I didn't knew this. I didn't I knew that, I don't have to learn more. I don't have to overcomplicate, but still I was overcomplicating things, still I was overlearning things. But see now, I have done a bunch of losses and then finally realized. I already knew it. Several videos I've seen in YouTube, they're telling me. But it hits completely different when you learn from your own losses. And that's what it's needed. So I'm not some sort of super trader or anything. Also trading in demo, I don't even have live account. Okay, but I'm trying my best. And last thing that I'm gonna say is, it's my journey to become a good trader. So let's see uh, how much good trader we can become. And that's all for the day. Thank you.